So looking at price and volume together is an edge, in my humble opinion. Price is the most important, but you can actually tell from price and volume relationships, and I assure you they're not rocket science, that whether somebody's playing with you or not, the big players can easily manipulate price, but they can't manipulate volume that easily.
And with this opening clip, we welcome you to today's feature on David Paul, one of the most respected voices in professional trading. This first insight goes straight to a reality most traders overlook. It is not only about price moving up or down, it is about understanding what price is doing in relation to volume. That relationship reveals when the market is behaving naturally and when larger players may be influencing price action. Learning to read that interaction is one of the earliest edges a trader can develop. In today's video, we will explore key insights from David Paul that connect market behavior with trader behavior. His work shows that understanding price and volume is not about complexity, it's about clarity. When you learn how price reacts to real participation, you stop guessing and start interpreting what the market is actually telling you. Across the next clips, you will see how he explains manipulation, participation, and intent through simple observations. These are not theories built for textbooks. They are practical filters that help traders avoid traps, reduce emotional reactions, and make decisions based on evidence rather than hope. So if you like this kind of video, please like, subscribe, and turn on notifications. And join the ComLucro community to support the channel and keep improving as a trader. Now that we have seen why price alone is not enough, the next clip takes this idea further. When traders ignore liquidity, they often mistake movement for opportunity. In this next segment, David Paul explains why the best trades usually happen only after the majority has already been stopped out, when the market has cleared enough orders to move with intent.
The best trades occur after the masses have been stopped out. And markets tend to move. And that's because the big fellas up there, they can't press the wee button and get in, because there's just not enough liquidity there for them to get in size. So they have to, in fact, engineer 100,000 guys like you, sir. Pull you one way, your stop loss gets hit. That, in fact, sets off a sea of liquidity for them to get in. So even if you don't have the strength, or what I refer to jokingly as the testicular fortitude to buy at the level, if you can get in and you can see, using your cup here, you can see that lots and lots of people have been stopped out before you get in, then you're probably on the right side of the trade. The good trade's always the hard trade, always, but emotionally difficult. When it's time to buy, you won't want to.
That is one of David Paul's most important lessons. The best trades are often the hardest ones emotionally, because they require patience, discomfort, and the ability to act when most traders cannot. When it feels difficult to enter, it is often because the crowd has already been removed from the trade, and the move is finally free to develop without the noise of weak hands being shaken out. And that is exactly what leads us into the next idea, how discipline and adaptability turn understanding into a real edge in the market. After seeing how liquidity is created, this next clip takes us one step further into why many textbook setups fail in real market conditions. David Paul explains that some patterns look perfect on paper, but the risk required to trade them makes no sense in practice. That discomfort is not about fear. It is about recognizing when the math of the trade is working against you.
There's a head and shoulders reversal there, but I don't do that sort of stuff because the risk is a mile to make half a mile. Okay, it's great in the textbooks and whatever, but it's going to pull you in. It's then going to go back. If your stop's not the size of a number 27 bus away, you're going to get stopped out, and then it's got to go a hell of a long way for you to actually make any money. So a lot of that stuff works, but in theory, but it doesn't actually make a lot of money.
Here, David Paul reinforces a critical lesson. A trade can look correct technically and still be a bad trade from a risk perspective. When the stop has to be enormous just to survive normal price movement, the odds are no longer in your favor. Adaptation comes from questioning whether a setup truly offers asymmetric opportunity, not from forcing trades because a pattern looks familiar. That ability to step back and reassess is what separates a professional process from impulsive decision-making. And that brings us to the next key insight: how real traders turn experience into growth and use study as the foundation for resilience. Every trader faces complexity in the market, but very few take the time to truly understand it. In this next clip, David Paul reflects on one of the most important lessons from W.D. Gann and why deep understanding matters more than shortcuts. He explains that charts are not just patterns to copy, but structures that demand study, precision, and patience. True progress comes from doing the hard work, not from chasing easy answers.
Mr. Gann said so beautifully, the most important part of a chart is the lowest tick of the highest bar and the highest tick of the lowest bar. I'll never forget that. Gann wrote an awful lot of stuff, and some of the stuff is really, really, really difficult. His early stuff, his mechanical method is relatively simple, but his forecasting stuff is difficult, and to forecast with it, you have to, in fact, be able to square the charts.
That is the mindset shift David Paul is pointing to. Growth does not come from predicting more, but from understanding better. When traders invest time in studying structure and learning from complexity, discipline strengthens naturally, because you stop looking for shortcuts and start building skill. That is how experience turns into consistency over the long run. After learning how traders grow through experience, this takes the idea one step further. Progress does not come from finding the perfect model, but from knowing when simplicity is enough. In this next clip, David Paul explains why there is no holy grail in trading. Markets repeat, but traders often get stuck in theory, over-labeling, and trying to be right instead of effective. What matters is not academic perfection, but practical understanding and clarity of execution.
If you know nothing more about Elliott, then 3 up and 2 back is good, and 3 down and 2 up, that's great for a short. That's all you need to know. Trying to label charts from 1865 is a complete and utter waste of time. And even Bob Prechter says that his work is very academic. It's not that much use for being a trader.
That is a timeless reminder from David Paul. The market does not reward perfect labels or complex theories. It rewards clarity, discipline, and the ability to act on simple, repeatable structures. There is no single pattern that works forever, but traders who stay flexible, keep learning, and avoid overcomplication are the ones who last, because they keep their attention on what the market is doing, not on proving a theory right. And that brings us to the next insight: how top performers think differently and gain an edge through awareness. Once you understand that no single setup lasts forever, the next question becomes how you stay ahead. In this clip, David Paul explains that the difference is not in indicators, but in how traders respond in the moment. They do not rely on automatic reactions. Instead, they learn to recognize when instinct takes over and develop the ability to stay present, calm, and deliberate while others react emotionally.
We've got 2 brains. I'm sure you've all heard of the reptile brain and the front lobe brain. Well, I want you to think now, folks, that you're a summer's afternoon and the barbecue's going and kids are having fun playing football, right? And you're standing there. A ball comes out of nowhere. Football comes out of nowhere. What do? Duck. Yeah? Without thinking about it. Similar situation, but standing there Sunday afternoon and somebody throws a ball at you very slowly. What do? You catch it. Okay. So if somebody chucks a ball at you really, 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 really fast, believe it or not, and according to this professor of psychology at UCT, there's a part of your brain that actually reacts, and it reacts up to half a second faster than your normal brain, this reptile brain, and its job is to keep you out of trouble. And frequently that happens in our trading as well, where have you ever done something dumb that you've sworn you'll never do again? Okay. And that's because that reptile brain is in fact trying to keep you away from danger. Not a lion about to hit you, but in fact emotional danger. And another example is that you're driving along a road and a dog comes out. Do you swerve? Yeah, you probably do. And you've said to yourself 1,000 times that I'll never swerve again. I'm going to drive straight. But in the moment, that reptile brain... So there's a part of you, if you're not present, folks, there's a part of you that's designed by the Almighty, or whoever you believe in, to keep you safe and well, away from physical danger, away from emotional danger. And if you're not present, you'll find that you keep doing really, really, really dumb things. So when you're sitting in your trading desk, it's really, really important that you're totally and utterly there. Not thinking about the past, not thinking about the future, totally in that moment.
That is how great traders stay original, and why their edge does not come from secrets or complex tools, but from awareness and presence. By understanding how the brain reacts under pressure and learning to stay fully engaged in the moment, traders avoid repeating emotional mistakes and begin to act with clarity. Mastery in trading comes from this ability to stay conscious, adaptable, and mentally present when it matters most. And before we wrap up, let's take a moment to turn all these lessons into something you can actually apply. The 6 core principles inspired by David Paul's teachings. Step 1. Master emotional control. Every trading decision starts in the mind. Learn to recognize when emotion is driving your actions, whether it is frustration pushing you to act too fast or hesitation holding you back. Awareness is the first real edge because you cannot control what you do not see. Step 2. Understand liquidity and risk before opportunity. The best trades rarely feel comfortable. Markets often move only after the crowd has been stopped out, and that discomfort is part of the process. Learning to read liquidity and evaluate whether the risk truly makes sense is what separates professional thinking from textbook trading. Step 3. Adapt instead of reacting. Many setups look perfect on paper, but fail in real conditions because the risk is wrong. When the math of the trade is working against you, stepping back is a skill, not a weakness. Adaptation, not impulse, is what allows traders to survive changing market environments. Step 4. Grow through study and experience. Progress does not come from predicting more, but from understanding better. Study structure, price behavior, and context. Losses and mistakes are not setbacks. They are feedback. Resilience is built by learning from complexity, not by avoiding it. Step 5. Keep it simple and practical. There is no holy grail in trading. Markets repeat, but theory can easily become a trap. Focus on what actually works in real time, clarity of execution, simple structures, and disciplined decision-making. Simplicity is not weakness, it is strength. Step 6. Stay present and build awareness. Great traders think differently because they respond differently. They do not trade on instinct alone. They stay present, recognize emotional reactions, and act with intention. Awareness and presence are what keep you from repeating the same mistakes and allow you to stay original in the market. And that is the essence of David Paul's message. Control your emotions, understand risk and liquidity, keep learning, and build a process that adapts and lasts over time. Please also remember that our mission here on the ComLucro channel is to give traders the clarity and confidence they need to make smarter decisions in the market. Every video, every course, and every piece of content we create has one clear purpose: to deliver practical, easy-to-apply knowledge that helps you grow step by step as a trader. Here on the channel, you'll find complete courses on smart money concepts, technical analysis for day traders, and trading psychology. Because trading isn't just about charts, it's also about mindset, discipline, and risk management. We also share lessons and insights from some of the most respected names in trading, professionals like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, Larry Williams, and many others whose experience has shaped the way we understand the markets today. If you enjoyed this video and found it helpful, please give it a like. It really helps more traders discover our content. And don't forget to subscribe and turn on notifications so you never miss our latest insights and strategies. If you'd like to go even deeper and access exclusive content, early video releases, and additional tools to support your development, consider joining the ComLucro trader community right here on YouTube. It's a simple way to support our work and a smart investment in your own growth as a trader. Thanks for watching, and I'll see you in the next video.